How's the American consumer?
How's the American consumer? The latest data, Mark, that I've seen from a week ago, not a recommendation for or against American Express, but they had really, really good earnings. And right now, they have exposure to the higher end consumer here in the US. And a crazy stat I heard, and I can't provide you the source on it, but the top 10% of American consumers do 50% of the consumption. And if that higher end company like American Express that caters to them is reaffirming guidance for the year, what does that tell you? Now, I throw it out there. If this policy uncertainty continues 2, 3, 4 weeks, fill in the blank, at some point, I think it's going to affect the spending habits. But in the data, especially high-end consumer, I don't think it's happened yet. My 2 cents on that.
How's the American dollar?
Weak, very weak right now. So for the past couple of months, the American dollar has virtually been in free fall, and the things that we've seen come out of that is stronger international stock performance. So that's one of the things that's a big topic in the news headlines right now is, hey, international stocks are performing much better than American stocks, and is that going to last? And my answer would be if the dollar continues to be weak, which has been caused by the tariff situation and the trade negotiations, then yeah, I would expect international stocks to continue to outperform. However, if the dollar begins to strengthen again, I would imagine that money will rotate back into the American stock market.
Yep.
How are Treasuries doing?
How are Treasuries doing? I would say right now it's definitely a mixed bag. I think there's a lot of selling pressure from international governments, and I think there's just a lot of pressure on the higher end of the curve. So 10-year plus in maturity, you really haven't seen those rates come down like you normally would in a market sell-off. And I think this is confusing a lot of investors right now, Mark, because it brings us back to 2022, where everything was correlated. And as a reminder for our newer listeners and viewers, in 2022, you had a situation where stocks were falling, bond prices were falling with it, and there was like no safe havens. And you've seen that over the last couple of months. Correlations have been high. Anything that's longer dated maturities and treasuries have continued to be a disaster.
How's the housing market?
Housing market is still fine in my opinion, but we are starting to see some cracks, I think. Over the past several years, there's been a lot of new homes constructed. And, I was reading an article earlier this week on how people are having some trouble selling homes in some of the warmer states like Florida. Mm-hmm. I haven't heard much of that yet, at least in the area that we live in Dayton, Ohio. But I think, the higher for longer interest rates are starting to weigh on consumers. And until rates come down, I don't see that changing anytime soon, but for right now, it's still strong. You're going to have, dips in the market and you're going to have peaks in the market. Nothing that's totally alarming yet, but, until we start to see default rates significantly go higher, I would say that the housing market's just fine for right now.
And the other aspect of it is a lot of people have equity in their home over the past 5 years. You've seen these big property value gains the last 5 years. And because of the interest rate environment, I'd argue the average consumer has not tapped that equity.
Yeah, and actually, it's funny. I just wrote a piece for a friend of ours in a newsletter they do every quarter about real estate. And, something that's not talked about is for most people, I'm not going to generalize, but for most people, their house is their largest financial asset, right?
Mm-hmm. Correct.
And you don't really take that into consideration a lot of the times, but like you said, home equity levels are the highest we've seen, I think, ever right now.
Yeah, and so if you have a lot of equity in your home, you're not going to walk away from it. If you can't afford it, you're going to sell it and get that equity out.
Right.
I think you are seeing, as you mentioned, some elevated inventories in certain parts of the country. Take Florida as an example. We've talked about it in the podcast. When you can't get home insurance because it's no longer offered by anyone, and you think to yourself, well, if a natural disaster comes along and I can't afford to repair it, I guess I can't live here anymore. And I'm not here to debate the negatives of that effect, but I'm not surprised to see elevated inventories with that alone as a data point.
Yeah, and last point on this topic, if you ask me this question a year from now and I say the housing market's weak, doesn't mean it has to look exactly like it did in 07 and 08.
Yeah, well said.